Mahesh, if one assumes that FIs will continue to sell, nobody knows, but let's assume if this feature continues, then in the near term, do you think that could be an overhang for, let's say, FMCG, banks, IT, because these sectors are suffering because of technical factors?
Yeah, so as I said, I don't know what you mean by near term and long term, but if I take near term as like 1 to 2 months perspective, I would say that many of these sectors like even FMCG, or IT or pharma, which are the defensive sectors, these are under-owned sectors, both by foreigners as well as the domestic investors. If I take a near term, meaning next 1 to 2 month perspective, I believe that some of these sectors can actually do better. And that's what we've recently done. We've actually recently raised weight on the FMCG sector, more from a tactical and from a near-term perspective, because as I mentioned to you earlier, our longer-term thesis still continues to stay positive on the CAPEX story. And from a 12-month perspective, I still like the infrastructure, the industrial, the real estate, kind of names. But from a near-term and from a tactical standpoint, I would say playing the defensive story through consumer and FMCG actually makes sense.
Mahesh, are you still overweight financials and, including private banks? Because they are the ones which have really underperformed, but still conviction is pretty high on the street.
Yeah, that's true. I think, so I think for the private banks to actually start performing in a meaningful way, we believe that there would need to be strong foreign flows, which seem to be being evasive at this point in time. And I do see, the risk reward actually tilting in favor of the state-owned banks. It's been happening for some time. It's not just now. It's been there, for some time. And I think, that will probably still continue because, of the two factors. I mean, we have seen some credit growth slowdown driven earnings cuts for private banks. We've seen some of that happening in the December quarter, in the March quarter results as well. And probably it will continue for the next couple of quarters as well, as the high loan to deposit ratio is weighing on the credit growth for some of the private banks. Whereas there is no such issue with the state-owned banks. And on the other hand, I would say that with our expectation of a strong CAPEX cycle, which is actually a great news for the NPLs or from the credit cost perspective. And I believe that you might actually see some positive surprises coming on the credit cost side and on the NPL side over the next not just few quarters, but actually a few years, which could be an incremental positive for state-owned banks.
If you like this video, then like, share and subscribe to ET Now.